Ladies and gentlemen, welcome to the latest Meet the Lender recorded video session. I'm delighted today to be joined by CEO of more2life, Dave Harris, and Ben Waugh is with him as well, just to give us the very latest on more2life. I think it would be remiss if I didn't mention that more2life were one of the quickest off the blocks here for the sector to make sure that our wheels kept turning. So I really wanted to give everybody the chance to hear from Dave and Ben on what the latest state of play is with more2life, with a huge range of leading edge competitive products, and really just how they can best help and support you. And then we've got some pre-recorded or pre-asked questions, which I'll bring in once the guys have had a chance to lay out the more2life current situation. So Dave, Ben, I don't know who wants to take the lead on this, but over to you guys.
Okay, well, I'll kick off, Stuart, and I'm sure Ben will come in with various points of detail, because I'd like to actually credit him and his team actually for what you just referenced. When this whole crisis started, more2life was determined to, as you put it, find a way of keeping the wheels turning. But it's been Ben and his team that have done everything from making sure our people can work at home to the way in which we've made sure all of our product lines have been able to continue to accept new business. And it's Ben and his team who are keeping the pipelines moving as applications become offers and offers become completions. And hopefully that means that cash flow continues to drop into advisors' bank accounts and into our bank accounts. And most importantly of all, customers get the solution that they need right now. So publicly, Ben, I think you guys have done a great job, and I'm proud of it. But I guess for this forum, I'd like to remind everybody actually that just before all of this started, some of you may have even attended it. I know you were there, Stuart. more2life relaunched its brand. We did it at a museum in London that housed all James Bond memorabilia, but we were relaunching the brand with three very clear pillars that we feel have and will continue to support everything that we're trying to do here in more2life. And that is we want to make sure, number one, we're completely advisor focused in the support and expertise that we bring to market. And we want to make sure that that focus on you guys, the advisors, is as good as it can be. The second pillar is, we believe we have and will certainly continue to work very hard to have the broadest range of modern lending products that are available in the market, because we have 5 funders, 5 balance sheets allowing us to innovate in terms of the products and features that we have. Whereas, many of the companies only have their own balance sheets to rely on. We've got 5 balance sheets that allow us to innovate. And then finally, and this one's probably been the most important during this crisis, the third pillar is we have and we will continue to invest in technology and innovation to accelerate your success and our success in this market. And I certainly believe that some of the things I referenced that Ben and his team have been doing have lent on that technology and allowed us to dovetail with various third parties that we all rely on in this industry, whether it's valuers or solicitors. We've been able to make those connections come together and work faster than most. I think it's important to remember that's how we were positioning the brand before all of this started. And I think I'd like to think like those things, during this period. For me and Ben, we always saw this crisis, because it has been a crisis, as breaking down into 3 distinct chunks. There would be the first phase where we all needed to work very hard to make sure, as you put it, Stu, the wheels can continue to turn. There would then be a middle section when we would need to communicate out to the market how things are now temporarily working, because there was a lot of change for us all to get our heads around. and they will eventually find the light at the end of the tunnel that takes us back to whatever new normal is now going to lie ahead for us. And, you know, fingers crossed, we're going to hear from Boris, if not today, certainly Sunday, in terms of how some of that light at the end of the tunnel is going to open up. So, you know, for me, we've been through phase 1, we're in phase 2, and hopefully come Sunday we'll start to see some light in terms of what phase 3 will look like. But, you know, Stu, you know, for me, I wouldn't mind just recapping to the guys on the call some of the things that, you know, we were able to do in that first phase. You know, more2life was the first lender to mobilize remote valuations across all of our product lines. You know, we were able to do that because Ben worked very successfully with eServe. There was innovation on process, there was innovation on systems, you know, and those valuations, as I'm sure Ben, you can come in a moment, you know, you're now seeing those whiz through your processes and your pipelines, you know, really, really successfly. So, you know, that was a real positive. I think, you know, other valuation firms are still struggling. They, you know, they have backlogs. Other lenders are struggling, but, you know, that remote valuation that we've got moving with eServe has been very effective. I also, he's not on this call, but there's a guy called Roland Steer who negotiates with all of our funders to, you know, allow us to live up to that second pillar that I described, the broadest range of products that exist in the market. And I must say there was a lot of hard work that Roland had to put in to make sure our funders were still willing to put money into this market and do that with very competitive prices and features. And I think Roland's done a great job there. You know, certainly if I think about, hopefully everybody knows we've kind of got products that are in the low LTV space all the way up to the max LTV space, all the way from low interest rate up to high interest rate solutions. And, you know, if I just pick 2 of those, you know, the Flexi product is now, you know, the lowest rate in the market, and, you know, there are no retentions on those products. And all the way at the top of the market, we've got Prime Choice, which, again, competitive prices, no retention on those products. So, you know, that's something that I think, you know, we're proud of. The products in between, you know, they do battle it out with the other providers that are in this market. There are some retentions on our product lines, but, you know, I think we've kept our proposition quite competitive. I also think that, you know, the way in which all of that change has had to be digested by advisors, I mean, it must have just been a nightmare. Everything was just thrown up in the air. Everything was changing for you. But hopefully, you know, we've managed to, at least we've attempted to communicate as clearly as possible how you can still do business with more2life. You know, marketing, you know, has worked very hard at coming up with what we hope have been very clear summaries of how our systems are now working. You know, I think in summary, I'm just kind of going back and, you know, patting Ben and the guys on the back really for the hard work that they've done, and hopefully the guys here appreciate that hard work. But, you know, for me, it's just been amazing. You know, in a time when everybody's working from home, you know, we're now seeing, and Ben, maybe you could come in here and mention some of the statistics, but from my perspective, to have applications still able to be submitted online and have those apps turning into offers, i.e., you know, we've automatically served the valuation request out to eServe. They've done a remote valuation. You know, we're seeing the quickest turnaround, I think, at the moment has been 6 hours. All of this going on, we've still been able to get an app to an offer in 6 hours. And I mean, Ben, just bringing you in here, what's the total quantum now of how many valuations, offers, completions you've done in this period?
Sure. So morning, everyone. So I'm Dave's Director of Operations and Change at more2life, for those of you that don't know me. And yeah, just to add to that, they first to do remote valuations with our strategic partners, eServe. I think we were faster than everyone else. We've done more than 1,100 remote valuations now. Average turnaround time for eServe from instruction to getting a remote valuation back is 0.8 days. We've had property valued worth more than £350 million. That's led to more than 650 offers being issued already, with a lot more to come. And we've even done more than £1 million worth of completions now, where we've used an end-to-end remote valuation and offer creation process. And there's more than 25 customers now that have had completed loans. And the average sort of working days on those completed cases has been around 15 to 18 days. Unfortunately, I would just temper some of that optimism by saying that unfortunately not all cases are flying through. There are still some properties that we can't deal with remote valuation, but we continue to work very closely with eServe and our funders, as Dave referred to continue to find ways of getting more and more properties through there. So, for example, very early on, it became clear that on the capital choice product, there was an issue where a lot of properties were failing at remote valuations because the photos weren't up to date enough that eServe held. But we managed to find a way through those, and those remote valuations were coming back. There was about 100 cases that were impacted by their unblocks in a day. And we continue to work with eServe, as I say, on other opportunities. There's a couple of opportunities we're working through now where address validation is failing at eServe, but with a bit of jiggery pokery and some consultation with brokers, we're able to patch those addresses up and make sure that they go through the eServe process. So it's a good start. We're not completely where we want to be yet, but we continue to work very, very hard so that you can support your customers, which we know is the most important thing through these challenging times. I think we'd all agree.
Yeah, I mean, the other thing that's been massively helpful, as more2life is trying to steer our way through all of this, has been the input that we've also been able to get, from Stuart at Air, other advisors. I've had calls with some of you here. I can see, David Wright. I've had calls with, with you, and we've been listening. I've always had this phrase at more2life that we need to grow big ears. Some of you may have heard me say this before. We're a lender that wants to uphold those pillars that I say underpin our brand. And one of the ways we can do that is by having big ears and listening to, the issues and opportunities that the market is facing. And through all of this, one of the things that we picked up on was, several firms were having to think about what is, I think somebody described it as, what are their advice philosophies right now? Just the way in which they deliver from it being face-to-face, but to over the telephone temporarily. But, would there be certain amendments needing to be made? Absolutely, in an absolute need to have the money now, need to be asked to wait. And that input from advisors in terms of how they were reconstructing their advice philosophies led to another thing that I'm really proud that more2life was able to negotiate with our funders. And hopefully you're all aware of this, but that is that an application can be submitted to us now, and the interest rate and the terms of that application will hold for 6 months. Yeah, so as long as you can decide whether to ask Ben and his team to, this is somebody that needs the money right here, right now, in which case we can hopefully do a remote valuation, get an offer out, and then move to completion. Where, however, you and the customer want to pause and wait, my phrase is we can park that case in a car park, and we can hold that case in a car park for up to 6 months as an application, and the interest rate and the terms will still apply, giving you and your customers the opportunity to just pause and let some of this now hopefully move past us, and maybe some of the more aspirational things that they may want to do equity release for then become appropriate because they can build their extension or they can go on a holiday. And at that case, we can, at that point, sorry, we can then move the case forward, and you will still have the interest rate and the terms that were available when you first submitted it. So I believe that's quite a unique position that we have, but it's something that, you know, he's not on this call, but our Director of Funding, Roland Steer, successfully got our funders to back. And I think it does underpin that pillar of us wanting a broad range of innovative products in terms of what our brand stands for. So, Stu, I've rattled on for a bit, but I mean, those are the kind of things that we have done, which is looking back the way. If I just pause to say the things that we're hoping to do, as you know, Boris tells us what lies ahead of us on Sunday. You know, we are relentless behind the scenes, making sure that we're preparing with eServe to, you know, as soon as we can, move to a system where there may be 2 tracks that are available to customers. There'll be hopefully a track that we can reopen, whereby for customers who are happy with allowing a valuer access to their homes, then we work with eServe to make sure that those physical valuations can start to take place. We've got our fingers crossed that that is something that Boris will support. I sit on the on various industry boards, and you know, getting the housing market moving, I think, is an imperative for the UK economy. So I'm hoping that is something that what Boris announced will facilitate, but certainly behind the scenes, we're already planning, Ben is already planning with eServe, how we open up or return to that track where physical valuations can take place. For other cases, you know, where clients perhaps don't want to have a valuer visit their home, then we will be able to continue with remote valuation. So we're preparing for that. You know, who knows what Mr. Johnson's going to say on Sunday, but, you know, fingers crossed it will be something that will allow us to then take that planning and turn it into firm action. Shall I pause there, Stu, because we've talked quite a bit. I don't know whether you want to ask us questions or anybody else wants to ask us questions.
Yeah, thanks, Dave. Thanks, Ben.
Stu?
Yeah, can you hear me? Yeah, I've got an unstable internet connection. I think I'm the unstable one, not the internet connection.
You're a bit crackly.
There we go. We'll try that one. The technology is letting me down on this. Thanks, guys. Couple of questions for you, and then we'll, if we've got a chance at the end, just for a couple of minutes, we'll throw it open to any additional questions. Question from Barry. Will we now see an ongoing increase in interest rates post this crisis or the back end of it? And what's happening, and will this affect loan to values simultaneously? Question for either of you, I guess.
Yeah, I've mentioned his name a few times, but we've got this really clever actuary called Roland Steer who manages all our funders, and him and his team do all the various actuarial modelling that you know, lies behind answering that kind of question. So I feel like I should phone a friend. But you know, in all seriousness, it is a bit of a crystal ball. That kind of question is a bit of a crystal ball. If I take the second half of that question first, if I remind you, I said we've got these 5 funders, 5 balance sheets. Some of those funders are life companies. Some of those funders are international reinsurance companies, and one of them is a very large UK pension scheme. And each of them will have a different risk appetite and a different way, actually, that they model what LTVs they're comfortable with. And I can pretty confidently tell you that I can see that for our low LTV funders, that they should remain comfortable with the LTVs that they have available on their products. And in the max LTV space, which is where we've got a UK pension scheme, then I'm confident that they too will stay committed to those higher LTVs. So certainly for more2life, our expectation is we're not going to see any changes to our LTVs across our range. Now, I can't comment for other lenders because, without going into too much complexity, but the Solvency II rules that life companies in particular have to adhere to, it may see life companies shying away from their participation in higher LTVs. I'm not saying that will happen, but it could happen. And that's because the risk to them of no negative equity guarantees kicking in at a time when the property market may or may not become more unstable could increase, and therefore you might see them reduce their LTVs. But here at more2life, we're pretty confident that we won't see that happen. In terms of the first part of that question, in terms of where will interest rates go, the increases we've seen since we went into this crisis, what's happening there predominantly is that the funders and the balance sheets are having to look across in terms of, do they deploy capital to an asset that's a lifetime mortgage, or is there a different asset, and what yield can they get on that different asset? So what you've seen is the attractiveness of other assets go up a little bit. So therefore, for lifetime mortgages to remain as attractive to that investor, you've seen a little bit of interest rates going up. That's been the main reason for rates going up. Now, this is the crystal ball question. When I speak to Roland, we're not expecting to see that situation change such that there's further increases because of that relative attractiveness of other assets. So we're not expecting that to continue to drag rates up. But who knows? Something could suddenly happen, and that might change. But at the moment, we're not expecting that to happen. Who knows what stimulus is going to be put into the economy? I think the Bank of England rate, I think it was held at 0.1 yesterday, wasn't it? That's going to remain, that kind of base rate scenario is going to remain in play. So I don't think there's going to be any real pressure coming from, the base rate going up for some time either. But so my short answer is I'm not expecting there to be significant upward movement in rates beyond what we've already seen. But nobody hold me to this on this call if suddenly something happens that none of us can foresee. But for now, the expectation within more2life is we're not going to see significant increases in interest rates.
Real
bit long answer, but hopefully that makes sense.
Thanks, Dave. And I think the good thing is that sends out a pretty clear message, and I think this is being echoed.
Still there, Stu?
Yeah. Can you hear me?
Yeah.
Yeah, my connection is still unstable. I think that's good because that's a bit of stability that we're all going to be quite glad to see in this time of ever-changing and tall waves that we face into in this storm. So anything that remains stable that we can cling on to and move forward from as a platform is really good. I'm just going to go through a couple of other questions. Some of them have actually been mostly already addressed. So just comment if there's any extras that you wanted to add. There's a question from Greville. If I could ask why, and I think this was partially addressed in regards to how quick some of these cases that you've had have gone from desktop valuation through the system in a matter of days. But he said, why are more2life still using Optima when there are concerns around their standard of service or substandard service? How has that fared, Dave? Is that sort of, as I say, partially addressed by the speed? Because I guess they're, in certain those cases, they're moving pretty quickly. But generally speaking, how are you finding them?
Want me to take that one, Dave?
Yeah, before you do, Ben, I think Stuart sounds like that political correspondent on ITV that drags out the way in which he speaks. I forgot what his name is now, but he's reminding me of him.
I'll take that as a compliment.
Yeah, no, Ben, you take the question. Obviously, Yeah, I know it was going to just sound like that, the way that your computer is playing with your voice. But yeah, Ben, you take the question. Yeah.
Okay, so we continue to work closely with Enact and Optima, who both generally have actually been able to manage the COVID-19 situation pretty well on the whole. There was a few challenges with getting phone lines and calls in and out of the agents that were now working at home, but both of those are back up and running largely now. We have had a few issues with Optima, but equally, in fairness, we've also had a few issues with Enact with individual cases. What I would say is we do a detailed service review with all of our suppliers with that C-Serve and Enact and move through these sorts of things. And what I would say is, I think, if you go back a year or so, there were definitely some more quality issues with Optima, but generally now, I would say the service is pretty good we get from them. Is something we keep constantly under view, and if there are specific cases that you want me to have a look at, I'm more than happy if you drop me an email after this. I can pick them up and investigate and see if there's any lessons to be learned there. But generally, I think both our conveyances are working okay right now.
Thanks, Ben. Okay, so just one or two others. There was a question here from Tony. I'll word it in the way that hopefully it will make sense. How are more2life finding brokers that they're coming across? How are the sort of brokers differing during this crisis in what they're looking for from more2life? Dave, you mentioned having big ears, and I know that's a mantra that in the last few months has been really as a core point. But any sort of differences, any specific things brokers are searching for with more2life, big sort of questions that they're asking you?
I mean, beyond what I've already said, I mean, the big thing that vexed me early on in this was, brokers really concerned about what do we do with our customers who, right here, right now, we don't believe it's the right thing to move them forward. Their reasons for wanting to do their equity releases because, they wanted to build an extension, and you can't get a builder in to build an extension. So, brokers worried about how they could approach providing advice there. So, I was, as I've already said, I was pleased the way in which we got this car park now where applications can be parked and the rate and the terms of that application can be held for 6 months. So I think there was some concern about all of that. And the other thing that I think is important, and I don't mind being honest about this, even for us as more2life, we real concern, so I'll personify this as me, the lender. It's a really scary moment when you don't know how quick your pipelines are going to be moving, and therefore how fast the cash is going to go from an application submitted to a completion written. Because just like advisors, we get paid here at more2life by our funders when the case completes. So I think there was quite understandably a real focus on how important cash flow counts to us all, and ensuring that we're moving cases as fast as we can and keeping brokers informed as best we can in terms of what information is needed to keep those cases moving forward. I think there's been quite a bit of focus on that, a lot of questioning on that. I know that Ben, for example, with a number of the network head offices, the specialist firms that operate in this market, where we're kind of having regular conversations with their teams to make sure that we understand exactly how to approach the pipelines and move the cases and the cash forward. So, I think that's been an important focus for all of us. I mean, Ben, anything else you would say that brokers have been probing us on and either unhappy about or wanting us to do better?
No, I think if I had to sum it up, Dave, I think it's just certainty. Certainty. Have I got products I can recommend to my customers at this time? Yes, you have. Can I get evaluation still to get to at least an offer position for customers that need that? Yes, you can. Can you get completions done despite all the delays in post, the challenges of doing independent legal advice at a customer level? you know, remotely and all those sorts of vagaries? Yes, you can. But I think as we've been through this process, as I reflect on it, I would say that's the one thing everyone's always wanted, is certainty on these key parts in the process, so that ultimately, you know, brokers can support the needs of them as, and I think we've been able to do that. But as you say, it's been a challenging journey, and unfortunately, all those bits of the jigsaw weren't quite all lined up for us right at the beginning. But I'm pleased to say we've got there in the end, and I think that's the main takeaway, I'd say, from all my conversations with brokers.
Yeah, and one thing I'd add as well, just to sort of build on Dave's point about having big ears. We've just completed or closed today a survey we've been doing with advisors. We've had a phenomenal response to it. Over 600 intermediaries and advisors across the later life lending space, giving us their insights into how COVID-19 has affected their businesses, how they think it will affect them going forward. So even beyond the end of this crisis, what kind of businesses they're going to return to. Is telephone-based advice going to carry on and be a feature? And critically, what kind of support they are looking for from providers like more2life. So we'll be making the outputs of that research available in due course. We're just sifting through the raw data now, but the fact that we've had around 600 or so responses means we've got a really significant base of data to work from, and should give a really interesting set of insights into how different pockets of this market, so whether you're a specialist or whether you're more on the periphery of this market, how people are feeling right now and how they're thinking and feeling about the future of the later life lending market. So as soon as we've collated all of that, we'll share it, as we always do with all our research, and make sure that you guys have access to that and you can see how the market's shaping up.
Thanks, Stuart. Thanks, guys. I'm conscious that we're sort of slightly over, but I think this has been really useful. I'm going to come back just to wrap this up in a minute and ask Ben, Dave, just to give one or two very punchy USPs that you think, messages that you want the guys to take away with them. But just, is there just probably one more question we've got time for, if anybody feels that we've not covered any major issues? If nothing's coming forward. No? Okay, great. What we'll do then is, I just want to come back, Ben first, and then I'll let Dave have the last words as more2life CEO. Ben, any sort of particular USP messages for the audience that you wanted to land?
Sure, thanks, Stuart. Yeah, so I just, you know, echo the point that, you know, if your customers want to just secure a rate, as Dave said, they can do that. If they want to take it through the whole end-to-end process and release cash because customers' needs are urgent, we can help with that. And I think what I would also flag is that there is an awful lot of planning now going on from us to look at what happens if we do see any announcements on Sunday night or even today around the lifting of lockdown. So there's a huge amount of effort going in from my team to make sure that we're working hand in glove with our strategic partners, eServe, around making sure that if your application is in with more2life, that you will be prioritised if you need physical valuation. And we will absolutely be the first equity release lender, certainly with eServe, that restores physical valuations as soon as we're able to. And therefore we will be getting, you know, those valuations back as soon as we can, and the offers created as soon as we can, again, to give customers the certainty that they need. And if, for example, we've completed on cases where there's retentions, we'll be looking to follow up obviously quickly with those physical valuations so that we can release the retention. So, you know, top of mind is, you know, where we are right now in the current marketplace, but we've already started thinking very clearly about what happens if we see a partial release on physical valuations, and how is that going to work, and how do we make sure our customers are at the front of the queue to get their needs met. So that's very much what I would say is what we're focusing on now, Stuart, and hopefully we can give a great service to brokers and customers through that thinking ahead. Dave?
Thanks, Ben. Dave?
I'm never good when people say, right, you need to come up with some punchy. Sorry. Yeah, I was just saying I'm never very good when people put me on the spot with come up with something punchy. So I guess for me, I'd probably just accentuate what I said at the beginning about the more2life brand. Yeah, so the more2life brand has those three pillars beneath it. I think they've driven us forward over the period. I've been here since 2013. I think they've driven us forward over quite a large part of that period. But they've certainly helped us through this crisis of us, making sure that we are providing advisor focused support and expertise. That's the first thing. The second thing, that we maintain a broad range of competitive lending products, and I think we've been able to do that. And then finally, that we've got technology that allows our success and your success to accelerate. And I think that has come into its own during this COVID crisis. And I guess for me, the final thing is, let's keep our fingers crossed that Boris does stand up and start to take the shackles off, right? Because together we went into this crisis, that first phase I described, and we kept the wheels turning together. We listened to what you wanted, and hopefully we've delivered it. In the middle phase, we've communicated how that support can be used. And now, as hopefully we move into the third phase, as Ben has said, we'll react and we'll make different tracks available for remote valves, physical valves, whatever it may be. But the most important light that I think is at the end of that tunnel is consumers are going to need us as an industry, more than they ever have. The value of what you guys, to deliver to them as advisors is just going to be so, so important. So it has been tough. It's been tough for all of us, but I'd like to think that, that light is at the end of the tunnel. And, as we move towards it, I'd just like to say thank you to all of the advisors, on this call that have placed business with us over the years. We don't get it right all of the time, but, we do try and wear these big ears. Ben and his team work very hard to try and keep, the cash flow moving for us all. Actually, I'm a bit emotional about it, really. It's really important what we do, guys. So I'm looking forward to continuing to do that with you over the coming months. So thanks very much.
Thank you, Dave. Thank you, Ben. Thank you for everybody attending. If I can just remind you, the very latest information is all on our COVID-19 business update page at airsourcing.co.uk. There are a couple of more meet the provider interviews next Tuesday. But thank you especially to more2life for stepping straight up and wanting to share their thoughts with you this week as early as possible and be one of the first to communicate with the brokers. I think that sort of echoes that ears wide open message that Dave's put across. So thank you very much. We'll wrap this meeting up. Any questions, please feel free to email us at airsourcing.co.uk. Thanks all.
Cheers everyone. Bye bye.
Thanks, Stuart. Appreciate it.